Hi, this is Mark with your analysis for Monday the 15th of February. I have explained in the video I've done for the weekly analysis, which we've done brilliant with the last few weeks. We've had thousands of pips of potential moves that we've predicted and calculated from weekly charts with relatively small stops as well. But I've explained that tomorrow is going to be difficult because it's the US holiday. It's also a Chinese bank holiday all week, which quite interesting, and all the China grounds to halt. Problem is because a large chunk of the traders from around the world will not be trading tomorrow and they will be enjoying their long weekend, it is difficult to analyze from a technical perspective. And what may happen is you will either end up with spikes or you will possibly end up with tight sideways ranges, so it is tricky. I mean, the week ahead there is a lot of news this week, particularly Aussie dollar, some big news, British, and a lot of Aussie dollar news, British pound, important news, as well as US dollar and FOMC meetings. So there's loads of stuff going on this week, so you really need to check your calendars every day. Now, I just want to show you a few technical things. Because I'm wary of trading tomorrow, I just want to show you, this was a flag, what is known as a flag pattern trade that we did on the euro earlier in the year, in January. And what I'd explained was that with a flag pattern here, this is seen as the actual flag, the banner, and this is what's known as the flagpole. And the theory of this says that if price moves down to a banner, then the size of that move was, if you look at the middle figure, it was approximately 727 pips. Ignore the last digit, this is a 5-digit platform. So the theory said that price would move 700 and odd, 750 pips, shall we say. And what happened? Price broke out of this barrier and came down 750, 760, 780 pips. Spooky. It does work. It doesn't work all the time, of course, but it is an interesting theory, and it is covered in detail in the blog on the Forex strategies page. There is a video explaining specifically about this type of trade. And the reason why I mention it is because on the 4-hour, on a number of pairs at the moment, we have had a similar pattern, and we have similar patterns now developing. This is the euro dollar on the 4-hour chart from last week. And what happened? The price came down 290, let's say 300 pips, and we went into a sideways flag pattern. Now at the moment, since the breakout of the pattern, price has moved 230, 240 pips. That may be it. But it is an interesting theory that does get repeated. Now, let's look at the pound. This is a British pound dollar on a 4-hour chart, and although this is a little bit untidy at the moment, you can clearly see that price, we are getting what is known as higher lows as price is going up, and we are getting an untidy looking flag pattern. So what happens? Well, we have here a potential move according to theory of 370 pips. Were that to materialize here, then 370 pips would take us down into the region of 1.520. What would be particularly nice here? We had some great success in the summer and in December taking bounces off top trend line areas, and we have been looking on the weekly chart for a move of 1.500, so 5800. So if it gets up there tomorrow, I did say on the weekly video 1.5765 to 1.580, but here we then have multiple reasons why price may go back down again. And the beauty of this would be for us that we are looking at a target of 200 pips to the bottom trend line, but if you then add the 300 odd pips here as well, we are looking at a potential 500 or 600 pip move. So it is something for you to bear in mind and something for you to look at on all of the charts. Again, this is a dollar yen. Now again, this is a bit messy, and this was a huge user related drop the other week, but the theory says again that if price was to break out, it would break down approximately 150 pips, which would take us down to the region of 88. Again, last week we were taking off the weekly charts. We took a trade at 90, and then on the daily analysis on Thursday or Friday, I can't remember, we took a trade shorting at 90.30. And again, that is a huge area for me because it is an area of previous support and resistance. It's just above a major psychological level. We have a 200 EMA here on the 4 hour. We have the 55 here on the daily, not far above. So it's giving us a clue for where we could put our stops. Weekly we have nothing. But it is again an area of major interest to me tomorrow, because I have a potential move of 77 pips here for the move to the bottom of the channel, and then as I just showed you, we have a potential for a few hundred pips, bearing in mind this flag pattern. Now, different kind of theory. This is the CAD, dollar CAD on a daily chart. I have fibbed here from the top of the recent move, or the bottom of the recent move to the top, and price on Friday closed below the 50% fib and the psychological level of 1.0500, which has also been a previous area of support and resistance. So it is a very important area. The EMAs are rolling over, we're riding the 5 down, stochastics are pointing down, lots of things to suggest that this is going to keep going down. However, the CAD is not my favorite pair, in that it does tend to go up, down, up, down, up, down. But the way that we have dealt with this, and we're looking for is to deal with it, is you could perhaps fib Friday's daily candle, which would take you back into the area of 1.055 again. Or what we have done on the bigger time frame, we've gone to the weekly and we fibbed on a weekly chart and said that we would be looking for the region of 1.600 for a pullback. I think in retrospect, I think I just favour, rather than confuse you, I think let's have a look at this. Let's look to consider tomorrow a pullback to 1.050, anywhere around this area for a possible move further down. The other option is, we had some trades the other week that worked reasonably well, that price simply went past the recent low. So here on the CAD, the recent low is 20 pips below, which is not a lot, at 1.0477. So we would be looking in the region of 1.0460 for a possible short. Okay, so that's just another technical way that you can trade, either on a pullback, which I favour, or occasionally if a move just carries on, then 20 pips beyond the recent low. New Zealand dollar has bounced off the 200 EMA, not sure what's going on at the moment. Euro pound. Euro pound, it could be said on this daily chart that this could be said to be a flag pattern again. Now, he had a great move here. On Tuesday, I'd said to my followers we were going to look to short here at 88.40, and it did it to the pip. And the reason why, we had a never in a million years Bollinger Band coming down, which says that price will not break it. We have the daily 200 EMA and the 55 EMA. There were loads and loads of things going on here, and looking at it, it was quite probably a 50% fib as well of the daily move. So we took the short here, and on Friday this was a brilliant move. This was a 150 pip move, which is a big move for the EURGBP. But if we're looking at the flag pattern theory again, that suggests that the breakout, if it comes here, will be 240 odd pips, which would take us down to the region of 0.8400. So how do you deal with it? Well, you either wait for the price to break out and then pull back and touch this area to fall away, or the ideal would be if we could get a big pullback back up to this area again, because again then we are looking for a big move down. So I will do more detailed analysis tomorrow. As I say, it is a public holiday. If you are in North America, enjoy your day off, and China, enjoy your week, if it actually is true that you get the week off, and I will catch you all tomorrow.